Welcome to the Daily Economic Briefing for July 25, 2025, where we unpack today's critical market moves, policy drama, and corporate headlines. Leading today's headlines, U.S. durable goods orders plunged by 10.4% in June, wiping out May's aircraft-driven surge. Core orders also fell slightly, signaling softness in business investment amid tariff uncertainties. This underscores ongoing struggles in the manufacturing sector impacted by elevated input costs and trade disruptions. Meanwhile, weekly jobless claims offered a brighter spot, declining to a three-month low of 217,000, reflecting a still resilient labor market despite slowing hiring momentum. Inflation pressures are also ticking upward. July CPI nowcasts indicate inflation edging just above the Fed's 2% target, influenced by recently implemented consumer tariffs. This complicates the Federal Reserve's upcoming decisions, especially amidst intensified pressure from former President Trump demanding substantial rate cuts. Speaking of the Fed, today witnessed a notable confrontation as Trump publicly pressed Fed Chair Jerome Powell for drastic rate reductions during a visit to the central bank's newly renovated headquarters. Powell reportedly remains firm in his stance on maintaining Fed independence. Markets reacted cautiously, with Treasury yields inching up slightly as investors tempered expectations of imminent rate cuts. On the trade front, optimism grows for a potential EU-US tariff compromise ahead of the August 1 deadline, offering relief to global markets. However, existing high tariffs on Asian countries continue to weigh heavily on industries like automotive and technology. Corporate earnings painted a mixed picture. Alphabet beat expectations, boosted by increased AI investments, while Tesla warned of tougher quarters ahead, and Intel announced significant layoffs amid restructuring efforts. Dow Inc. notably swung to losses, slashing dividends due to oversupply challenges, highlighting vulnerabilities in cyclical sectors. Equities showed divergence. Tech stocks powered indices like the Nasdaq to fresh highs, while industrials lagged due to tariff and rate concerns. Meanwhile, commodity markets saw modest gains in oil, buoyed by geopolitical developments, even as the dollar strengthened slightly. Looking ahead, all eyes are on next week's Fed meeting and critical GDP data. Investors remain wary, navigating late-cycle dynamics marked by persistent inflation, cautious manufacturing activity, and political tensions. That's your economic snapshot for July 25, 2025. Stay informed, stay strategic, and join us tomorrow for more insights.